All right, joining me is Zach Pandl, head of research at Grayscale, who, of course, is a leading crypto asset manager. They offer a full suite of crypto investment products, including ETFs. So they currently offer 15 ETFs altogether, nearly $19 billion in assets. They also have a number of other publicly traded crypto funds. They offer private crypto funds. They really do it all in the crypto space. And Zach himself, he's primarily responsible for heading up all of Grayscale's crypto market research and analysis, and ultimately communicating all of that with end clients and people like me. And so, Zach, it is great having you back on the podcast. I do feel like we have a lot to talk about given everything going on in crypto right now.
Hey, Nate, great to see you. Great to be back on the pod. Looking forward to this discussion.
Okay, so I thought let's just jump right in. And I want to start with Bitcoin, which is now down about 45% from its October high. So it's gone from roughly 125,000 to 68,000. And I was trying to think about the best way to set up our conversation. And I hope you like this. I landed on Bitcoin naysayers. So follow me on this. I know you've been in crypto long enough to know that anytime we see a downturn like this, the naysayers come out of the woodwork, right? It's like clockwork. And that is certainly the case right now. So I want to read you something from Bloomberg this past week, which I posted this on X. I'm not sure if you saw this, but I want to get your reaction. The article was basically about whether Bitcoin is having an identity crisis. So let me read this for you. They said, quote, "The defining struggle of this crypto era isn't about price, it's about purpose. And the sell-off is forcing a question Bitcoin hasn't needed to answer when prices were rising. If it isn't the best hedge, the best payment rail, or the best speculation, what exactly is it for?" And then bear with me, they also quoted this guy who is the founder of Seven's Report, which I don't know what that is, but let me read you his quote. So he said, quote, "People are realizing that Bitcoin is what it's always been, which is simply a speculative asset. Bitcoin is not replacing gold. It's not digital gold. It doesn't do the same thing. It doesn't give people the same utility that gold does. It's not an inflation hedge. There are better hedges, frankly, where you don't have to worry about the volatility. And it's not a chaos hedge either." And so with all of that as a backdrop, Zach, I am just going to give you the floor here and you can go wherever. How would you respond to all that?
It's a great place to start. Bitcoin is just doing its thing, and does not listen to any of that noise, producing blocks approximately every 10 minutes in a very predictable manner. As your listeners know, there's a limit on the number of Bitcoin supplies that'll ever exist of 21 million. And we're actually very, very close. In the next couple of weeks, we'll get the 20 millionth Bitcoin. So it's producing blocks and processing transactions in the way that it always has. Bitcoin's identity, or Bitcoin's purpose, is as a digital currency and a digital payments system that has certain attributes. And just like any other type of money, the yen or the euro or the dollar, Bitcoin is attractive because it offers some kind of features of money. It's a good medium of exchange or a good store of value. And Bitcoin provides those features in a unique way. It provides the medium exchange function without intermediaries. That's what makes it interesting compared to other types of money. I can send you Bitcoin, Nate, and I don't need to ask anybody's permission, and nobody can stand in the way of that transaction. And it provides this store of value function through scarcity by having a limit to the number of coins that will circulate, and a kind of very predictable, very transparent growth rate. And of course, that's extremely different from fiat currencies today, where you have, to some degree, uncontrolled growth, certainly in debt and deficits. So that is what Bitcoin is. Now, I think in the financial press, there is a tendency to define the asset just by its correlation. And I think that that's, of course, a misunderstanding about what's happening in this space. Quantum computing stocks, for example, fell exactly the same way that Bitcoin's price fell over the last few months. And we certainly are not going to question the value of quantum physics or the the use case of these technologies in the longer run. So with Bitcoin, for some reason, there is a desire always to sort of tie its identity just to price. But Bitcoin has a fundamental quality. And then just like other assets, its price can do something else. But to comment on price, I think what we have learned in the last few months is that Bitcoin has gone through a drawdown, a meaningful drawdown that was highly correlated to other frontier tech parts of markets. I mentioned quantum stocks, a lot of types of software stocks, defense tech, these types of things moved down more or less in lockstep with Bitcoin over the last few months. And that's a kind of tell, not so much about what Bitcoin is all about, its fundamental identity, but it's a tell about who the marginal buyer was over the last few years. And it's a kind of tell that was like growth portfolios, that many growth investors see blockchain technology, of which Bitcoin is the cornerstone asset. Many growth investors see public blockchain technology as a secular growth industry, and they incorporate it in portfolios along with other secular growth industries. So that's how I would articulate this, that Bitcoin is a digital currency, digital payment system with certain unique attributes that people may or may not find compelling. And its price moves a certain way, and it's much better to think about financial market analysis, I think, to try to understand the price. So to me, nothing has changed about Bitcoin, and nothing is wrong with Bitcoin, but you have had a big de-risking among growth-oriented investors, and we can talk about how that might unfold in the coming months. But we feel exactly the same about Bitcoin today that we did at 125,000 back in October.
To your point on the correlation with some other growth stocks, for example, I've seen a number of charts floating around recently that show over the past 6 to 12 months, Bitcoin has been very tightly correlated with software stocks, for example, which is what you were alluding to. And so clearly the insinuation is that Bitcoin is much more like a tech stock than a store of value like gold. Can you just talk more about that? And the reason I want to unpack this further is because the narrative around Bitcoin over the past several years, but I think going back even further, is that the value here is it's digital gold. It's a digital store of value. But you always see these charts that are posted that show the correlation with these high beta, stocks that are out there. And I just want investors to be able to get their head around how should they think about this. And before you answer that, I'll tell you, I've said for a long time that, and I stole this from Bloomberg's Eric Balchunas, that Bitcoin is gold, but as a teenager. It's still maturing, that I think longer term, we're going to end up in a spot where Bitcoin does have all of the characteristics that we see from gold, but gold's been around for thousands of years. Bitcoin's been around for, 17 years now. So it's not quite there yet. But how would you answer that?
Well, I've also heard Eric say that, and I think maybe he has the single best line to describe this. So I'll just maybe leave it in his words in that way. Bitcoin is still growing up, and there's a completely different buyer base, a holder base for say Bitcoin versus physical gold. Physical gold is a central bank asset today, the second largest holding among central bank reserves after the dollar and more than the euro. It's a remarkable fact, how important gold is as a reserve asset. And Bitcoin aspires to that over time, and in my personal view, will achieve that type of status in the fullness of time. But it's still growing up, exactly as as Eric's kind of very punchy phrasing suggests. That being said, I certainly am not willing to abandon the idea that Bitcoin should be considered a store of value. And what I mean by that, to my definition of what that term means, is a store of value is something that will hold its value in real terms in many different scenarios for the economy and for society. There's so many things that could happen in our world, from whether we have an economic recession or inflation, or changing in the financial world order and the role of the dollar and all these types of things. Bitcoin is distinct from all of those trends. It's autonomous and written in open source code. So it doesn't mind those things. And in that sense, it will continue to offer those functions, continue to perform as intended in a very wide range of scenarios. And that's what I mean by a store of value. With that said, we do give our clients lots of guidance about portfolio construction. And what it means to build Bitcoin into a diversified portfolio. So I can say that it's a store of value, and I can talk about its attributes as a medium of exchange or a store of value as a type of digital currency. But from a portfolio construction standpoint, we do need to talk about how things will likely behave in different types of scenarios. And gold and Bitcoin are different in that regard. And I do think gold has a correlation advantage from a portfolio construction standpoint. So if the goal is to find more diversifying assets to public market equities, gold does have an advantage in that regard, and bonds also have an advantage in that regard. If the goal is to position a portfolio for growth in public blockchain technology and a kind of transformation of our financial system driven by that technology, then Bitcoin is maybe a very natural asset and maybe has a return advantage to gold. So these are the kind of, I think there is a level of nuance that is lost on crypto Twitter, of course, and sometimes in the financial press. Bitcoin is what it is. It is a open source software that runs on a network of computers, and it has certain attributes of money that, in terms of its medium of exchange and store of value properties, that people may or may not find appealing. And that's what it is at a fundamental sense. And then it's price behavior in markets. That's just like any other asset price. That's about the nature of the buyers and sellers and their motivations. And you have to have an additional conversation with our clients about portfolio construction. And I think sophisticated investors, financial advisors, institutional investors, they are certainly not puzzled by that. They understand that's how many assets work, and Bitcoin is no different in that regard.
When you look at this current drawdown in Bitcoin, I mentioned it's down roughly 45% since early October. Is there anything in particular that you attribute that to? Are there some primary drivers here? And I know sometimes in the markets, or maybe oftentimes, there can be a lot of answers here. Maybe it can be difficult to pinpoint any one thing, but are there any factors that you would directly point to?
Yeah. Look, I want to say what I think it is not about, because I think that there's some things that you can rule out more or less by looking at information in markets. And I think one example of that is quantum. Quantum computing and what that means for classical cryptography and public blockchains and everything else that touches the internet. This is a very important and extremely interesting topic for an analyst, and something that, Nate, you and I think many others will be talking about for 10, 20 years to come. But when we look at what's happening in markets, those assets that are related to that technology have moved down in exactly the same way as the price of Bitcoin. Quantum computing stocks and the price of Bitcoin look very similar in the last few months. So you would expect those things to go in opposite directions if this was the trend that was weighing on the crypto asset class. And then within crypto, I do think it is fair to say that Bitcoin has unique governance and a different update process to update the Bitcoin software than other blockchains. But it is not the case that Bitcoin has somehow underperformed, broadly speaking, the rest of the asset class, or underperformed Ethereum and Solana, for example. More or less, those things have moved down in lockstep. So the pattern of prices across asset classes and within crypto, I think, tells us that it's probably actually not quantum here. And the other thing that is sort of notable is that the ETFs have not had that much selling. I think that is also interesting here, that it is the case there's been some outflows from the ETFs, but given the scale of the drawdown, it's been pretty modest. So I actually don't think that ETF sellers have been the main story. As best we can tell, and you're always working with incomplete information, in terms of I think the seller were, token long growth portfolios, likely people that were exposed to other types of software and broadly de-risking their portfolios. And when you have, this is a very common dynamic across other asset classes. When investors are de-risking for some reason, maybe they lost money on some part of their portfolio, oftentimes they reduce positions in other parts of their portfolios to rebalance or to manage volatility, et cetera. That's what I think is going on here, a de-risking in growth-oriented portfors of lots of different types. And I don't think we could say that it's the ETFs or that it's a quantum specifically. It's a kind of broad macro trend, and that's apparent in the correlations between price of Bitcoin and many other things that we're seeing in markets.
To your point on the ETFs, I was looking at some data yesterday, and I think since the beginning of October, there's been something like 7 billion in outflows. But if you look since spot Bitcoin ETFs debuted in January 2024, they have seen like 55 billion in inflows. Point being, this is a drop in the bucket in terms of the outflows that we have seen during this drawdown. I guess on that note, Zach, obviously Grayscale offers two very popular spot Bitcoin ETF products. You have GBTC, the Grayscale Bitcoin Trust. You have BTC, the Grayscale Bitcoin Mini Trust. And you talked a little bit about the flow data. I'm just curious, in the conversations that Grayscale is having with clients, are you hearing anything, even if it's just anecdotally, where you can sort of gauge the sentiment of spot Bitcoin ETF investors? We can look at the flow data. I'm just curious, what are you hearing from conversations?
Well, there's so many different types of clients. Look, I think when you have a drawdown, you always have to have a kind of risk management discussion. We are absolutely having that discussion for investors that are in the products already. And the nature of the tactics for those investors depend on what sort of size and scale their position is in the context of their portfolios. And so for investors that have a larger position, sometimes the time can be just to wait, and be confident about the market bottom and kind of manage downside risk in different ways. But for many other types of investors, they did not have the Bitcoin position or the crypto position that they maybe hoped to have. Maybe an investor thought they would get their Bitcoin allocation up to 1, 2, 3, 4%, something like this over time, and either hadn't done anything yet or had done a smaller portion of that trade. And so for those investors, the discussion is this the time to allocate further? Do I want to do a little bit now? Do I want a dollar cost average? Do I want to wait on maybe different catalysts, Clarity Act, further equity market risk, these types of things? So we're having both of those conversations, risk managing on the downside, but also about the forward-looking opportunity. And I think, one thing you're well aware of, Nate, although that these products have had big inflows, we are still just at the beginning of their potential scope over time. And most investors that use ETFs do not have an allocation to the Bitcoin ETFs. And so encouragingly, I would say that if I had to characterize the sentiment, I would say it's more opportunity focused than risk management focused. And a lot of investors sort of trying to lean in here, looking at current valuations as potentially a compelling entry point.
Yeah, I would echo everything that you just said. Clearly, I think we're still very early in Bitcoin adoption or spot Bitcoin ETF adoption within portfolios. And the other point I would make with an asset like Bitcoin, and I've said this forever, the key here when you allocate to Bitcoin in a portfolio is obviously position sizing. You need to have the appropriate position sizing, but also disciplined rebalancing. If you have an asset that does have higher volatility, that can be beneficial over the long term, as long as, again, you're not necessarily loading up the truck and having that overwhelm your portfolio, and you have disciplined rebalancing when it does show that volatility. So, I've talked about that for a long time. I think that's important to keep in mind. We've been focusing on Bitcoin. If we move over to some other popular crypto assets, and actually, let me give you a few performance figures. So Ethereum, I show that's down close to 60% since early October. Solana is down 60+%. XRP is down over 50%. And of course, Grayscale offers spot ETFs on all of these, along with some other crypto assets. But my question for you is, are there different drivers contributing to the downturn of these assets, or is it many of the same factors that you pointed to with Bitcoin?
I think it is broadly the same factors, and maybe it's an unsatisfying answer to say that this is about capital reduction in portfolios across the financial system, not something specific to Bitcoin or specific to Ethereum. But I do think that is the answer, and the kind of parallel move that you've seen in Bitcoin, Solana, Ethereum, many of the other marquee assets in our space speaks to that. It's broad risk reduction. And what I would do want to highlight something here, Nate, for some of these other assets, they do have some different fundamental drivers. The price, there's a lot of sometimes surprisingly high correlations given the different use cases of these assets over time. And I think that this is something that we need to keep an eye on, particularly at this moment in the market. The two mega trends for the crypto asset class today are adoption of stable coins and tokenized assets. And smart contract platforms like Ethereum, Solana, these are really the assets that benefit most directly from those trends. They host stable coins, host tokenized assets, and process transactions in those assets. So for investors that are interested in those structural themes, those assets, these smart contract platforms, Ethereum, Solana, these can be the natural place to lean into to benefit from those structural trends. Now, I think Bitcoin still participates in a crypto market that's driven by stable coins and tokenized assets. It's the cornerstone asset within the crypto ecosystem. But I think to position for growth at this moment in the market where stablecoins and tokenization are such important trends, I think looking carefully at Ethereum and Solana is an important opportunity for many of our clients. And that's one of the messages that we're delivering today.
All right. So let me ask you this. What might get us out of this current crypto winter? What turns all of this around? And if you want to separate Bitcoin from the other crypto assets, that's fine. As you're just describing, clearly there's some different fundamental factors there. Or you can just talk about everything more broadly. But this has been a substantial drawdown across crypto. And I think for new crypto investors in particular, they're probably feeling at least a little bit uncomfortable at the moment. So what do you think it will take to turn everything around? And to be clear, for listeners, nobody has a crystal ball. This isn't any sort of investment advice or recommendations. I'm just curious, as you look at the playing board right now, or the playing field right now, what do you see out there?
Yeah, let me say a couple of things. First off, I'm not willing to call it a crypto winter. We will see. That statement, I think, is both about magnitude and duration. And we have had a big drawdown, but how long lasting it is, I think, is still an open question. And I will admit I am on the quite a bit more optimistic about where all the trends are heading than maybe the average observer. So I am certainly not ready to use the W term to characterize what we are going through in the asset class today. And maybe, what are some of the things that could help us, find a bottom and support recovery, or what are some of the things that we're focused on that maybe inform that sense of optimism? The first thing I think is more regulatory clarity and more institutional investment in the fintech use cases of blockchains. And those are, primarily today about stable coins and tokenized assets. The Senate is at the moment taking up the Clarity Act, and it's unclear whether that legislation is going to become a law. I think if it is likely to become law, I think that would be a positive catalyst. That being said, the process towards regulatory clarity is much broader than just one piece of legislation, and I think we can see continued institutional investment in these important use cases. As that plays out, I think that helps reinforce the investment thesis here and also helps the market recover. The other side of it, Nate, we've talked about this being, partly macro driven, a lot of correlations between what's happening in crypto and other things like software stocks. And so we need to think about the macro market backdrop to think about what could help crypto recover. And there, I again am glass half full, and maybe glass 3/4 full would be my personal view. The U.S. economy is in fine shape, and I think the recent data suggests maybe accelerating to some degree. So encouraging signs, and for evidence of that in market, look at how industrials have been performing, right? Markets, parts of the financial markets that are sensitive to real economic growth, actually doing pretty well. I think that's consistent with the data. The second is that the AI CapEx theme, or the AI investment thesis, in my view, is holding up fine. There are these bigger picture questions about overinvestment and the return on investment over time, but we still have shortages in compute. We have a accelerating pace of innovation in this technology. I do not think that this is the moment where capital allocators are going to retreat from this extremely important new industry that is driving CapEx in the U.S. economy. And then lastly, the Federal Reserve changes, the potential changes here at the Federal Reserve, I think were one catalyst for price weakness in crypto and other asset classes. The President Trump naming Kevin Warsh as his candidate to replace Jerome Powell as Fed chair. I was a professional Fed watcher during Kevin Warsh's entire tenure at the Board of Governors. I have pretty familiar with all the things he said at that time. I think his recent comments about productivity driven by AI and the kind of downside risk on inflation from those innovation trends are more important than his legacy comments about quantitative easing when he was on the Board of Governors. So I think Kevin Warsh will not be an instinctively hawkish Fed chair, which is what the knee-jerk reaction in markets. So I put these big picture things together, Nate, the kind of fundamental trends driving adoption of public blockchain, the regulatory clarity and institutional investment in tokenized assets, and the kind of broad macro market picture here today. And those two things together look pretty encouraging to me. So I would say watch these variables. Is that thesis playing out, that we have constructive trends on both cases? If that's the case, we will find a bottom and eventually recovery in crypto valuations.
In terms of your optimism moving forward, you've mentioned stable coins and tokenization a couple of times here in our conversation. And if we go back to the Bloomberg piece that I mentioned earlier, some of the quotes there, one of the quotes they had was that the defining struggle of this crypto era isn't about price, it's about purpose. And they were speaking specifically to Bitcoin. But again, the insinuation here is, well, what is the purpose of crypto? And as you look at tangible use cases for crypto that are really taking hold right now, are stable coins and tokenization, is that what you would point to for people who are skeptical about the purpose of crypto? Again, how would you sort of refute that quote from Bloomberg?
Yeah. I believe that Bitcoin is a very important fundamental use case of this technology. Now, not everyone agrees with that. So let me just set that aside. But I'm certainly not willing to say that Bitcoin is somehow not a mega use case of this technology. I think I come from a macro perspective on this asset class, thinking about currency markets and macro assets in general. And I think Bitcoin plays a very important role in that space as a type of unique digital currency. That being said, just to leave that aside for the sake of the discussion, I think stablecoins are clearly the kind of killer app of smart contract-based or blockchain-based finance. And this is not going anywhere and just going to get bigger and bigger. You have heard news just in the last few days about companies like Stripe, doubling down on stablecoins. Stablecoins will be ubiquitous in the financial system. And are a very clear use case of blockchain technology. Where are people going to start to see this first? Things like cross-border payments, held on corporate balance sheets. I think you'll start to see stable coins as a cash item on large corporate regulatory filings. I think you'll see stable coins as collateral in derivatives contracts. So stable coins are very clearly the first killer app of this technology. And for people that are trying to kind of better understand what public blockchain is all about, stablecoins are a great place to look. The technology has all the different dimensions of blockchain technology have the same purpose. And that's bringing benefits to users of financial markets by removing the central role of intermediaries and using smart contracts, open finance, to conduct more activity on a peer-to-peer basis. That's what the technology is all about. And that has implications for stablecoins, for asset markets, for currency systems, and potentially a long list of other things. So stablecoins, I think, are the most transparent real-world use case today, a great place for people to start that are still learning about the asset class.
All right, Zach, we have just a few minutes left here. I feel like I would be remiss if I didn't ask you at least a couple of questions about Grayscale ETFs. And I was looking at the lineup. I believe your most recent launch, or it's one of the most recent launches, is the Grayscale Chainlink Trust ETF, ticker GLNK, GLNK. And I know we could do an entire podcast on Chainlink alone, but just very briefly for people unfamiliar with this, do you want to offer a quick overview? Because I actually think this is a perfect example of purpose in crypto.
Yeah, absolutely. So Chainlink is critical middleware technology for achieving this tokenization vision. When you think about where we're going in capital markets, tokenized assets, meaning bringing them on public blockchain technology and using that infrastructure to get new user benefits like real-time settlement, 24/7 trading, the efficiency of software-driven rather than human-driven markets. Chainlink is sort of the critical the middleware that's going to needed to be to achieve that outcome. And there's lots of things that are required: privacy, compliance, data feeds that connect the real world or the kind of traditional financial market world to crypto. Chainlink is that technology service provider, and so we think of it as really a great expression of the tokenization thesis, along with smart contract platforms like Ethereum, Solana, Chainlink. And for an investor that wants to build that thesis into a portfolio, I want to position my portfolio for the thesis of tokenization. Owning those three assets, Ethereum, Solana, Chainlink, is an excellent way to start, in my view. So I think that's how you should think of Chainlink, a kind of critical middleware software provider. It's almost impossible for me to see how the tokenization vision will come to life without an important role for Chainlink. That's how I think about it, and that's why investors are interested in putting it in their portfolios.
Okay, and then the other ETF I want to ask you about, which, by the way, I think I know some of these are technically ETPs. I use ETF to represent everything. I probably shouldn't be doing that, especially as somebody who prides himself on ETF education. But just for the record, I call everything an ETF. But I have to ask you about the Grayscale CoinDesk Crypto 5 ETF, ticker GDLC, which this holds a market cap weighted basket of Bitcoin, Ethereum, XRP, BNB, and Solana. And I think we've talked about this before. I'm a huge proponent of taking an index-based approach to crypto. I just think it will be extremely difficult to consistently pick the winners and losers in crypto over time, just like it is in other markets and asset classes, like the stock market. But I'm curious, what's been the initial reception to this ETF? And I know this was an uplisting, but just how has this gone so far? What are you hearing from Grayscale clients on this? Just talk a little bit about GDLC.
Well, you're exactly right, Nate, that index investing has a clear track record in traditional finance, and frankly, a track record in crypto as well. We've been running this product since 2018, and although it's now available on an ETF, we can look back to that track record and its performance. And in terms of capturing the outcome, capturing the opportunity of growth in the crypto asset class in a index-based way that automatically rebalances each quarter, ticker GDLC, the Grayscale CoinDesk Crypto 5 ETF, a great way to do that. And we can look at the use case of the validation in traditional finance and its own track record in crypto. Look, there's a lot of complexity with blockchain technology, just like other early stage technologies, whether it's quantum computing or something else. Investors just want to capture that moment and not have to be an expert in every one of these tokens. And then on top of that, crypto is a very top-heavy asset class. You're probably not going to need to own 500 different names to get a good beta exposure to the asset class. Just those 5 names in the index today are about 90% of investable crypto market cap. So with just 5 names in a simple index, you're getting a pretty good beta exposure to the asset class and capturing the opportunity over time. I think the reception has been great, and I think we will see continued growth in the index category over time for investors that, say, have a tax-advantaged account and they're looking to build in crypto alongside their other asset classes, fixed income equities. A product like GDLC is a great fit for those types of portfolios.
Zach, with all of the wonderful research you and the Grayscale team is putting out, where can people find this? Where's the best place for people to go?
Yeah, thanks, Nate. Please check out research.grayscale.com, and I'll quickly plug that we've recently started a new blog called The Stack. So for those of you that have insatiable demand for all things crypto and want the kind of regular updates, the front of mind ideas from the research team here, The Stack is a great new product to check out.
Well, that'll definitely be me. I have that insatiable appetite. Zach, always enjoy connecting. This was great. I think we covered just about everything, at least from a high level in the crypto markets, in about 30 minutes. So really appreciate your time this week. Thank you for joining me.
It's my pleasure, Nate. Thank you.
That was Zach Pandl, head of research at Grayscale. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. Thank you for joining me.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.